Okay, we're gonna see the collection system. So how does taxpayer make tax payment to the inland revenue? Now, the first thing we're gonna see is the final tax payment. Okay, how do you pay your final tax balance? Now we look at the due date. See, the due date for your final tax balance is actually the same due date for submission of your tax return form. Okay, it carries the same due date for your tax return form. So what's the due date for tax return form? Like you see, for companies' cases, it's 7 months from close of the account. So let's say, example, we have ABC Sendirian Berhad. The year end is 30th June. Now, so the C form for Y 2013, what's the last day for you to submit? 31st January 2014. Now, then at the same time, you also need to settle whatever balance of tax for the same YA by January 2014. See, the due date is the same. Now, but due date is the same, responsibility is not the same. So if you miss submitting the form by this due date, that is a late submission. Now, a late submission of the form is an offense. Okay, is an offense. Now, if on conviction and you're found guilty, then you can be liable to, remember the standard penalty, 200 to 2,000, maximum 6 months jail, or both. Now, this is the form. So you submit the form, but you don't pay the tax. That's also another problem. Okay. Now, if you submit the form and you don't pay the tax, that means it's a late payment of tax. Now, if there's a late payment, then we say there's a late payment penalty, which is a form of tax increase. So they increase the tax that you need to pay. So the increase means an interest, it's an interest. That's why if you pay the tax, you don't submit the form, it's not right. Okay, you're gonna get this. Okay, now you submit the form, you don't pay the tax, you're gonna get this. So you should do both. Okay, but obviously the more serious one is the form, not the tax. The tax is only an interest. Because the worst come to worst, you pay extra. But this is an offense. You can be jailed for not complying with this. So this is very serious. Follow? Okay, so how do you calculate the penalty? Now you get a 10%, and if you don't pay within 60 days, we add up. So it's a 10% plus another 5%. Because you know? Now, so we're going to see how to work out the penalty payment. Okay, page 244. Now, if you don't pay by the due date, okay, if you don't pay by the due date, it will automatically increase by 10% whatever outstanding tax. Okay, outstanding, the balance. Now, if after the 10%, you still don't settle the tax, okay, they give you 60 days from the due date. If you still don't settle, then we will add another 5%. So it's compounded. Now that means by the time you reach the second penalty, that means in total, is already 15.5. In total is 15.5. Yes, you know? Okay, look at this example. Now, Madam Tong submitted the tax return Form B for year of assessment 2013 on the 17th May 2014. Now, okay, right? B due date is 30th June. So this is 2013. So by 30th June 2014, she submitted on 17 May, so no issue, so it's on time. Now the return form stated that her chargeable income would be 34,000. She has paid tax installment. Now we see how the installment work later, but so far they say she has paid installment for 2013, which comes to 600 ringgit. So this is what she has paid. Now she intends to settle the balance on the 15th of December 2014. So what will be the implication? Okay, so how much balance that she needs to pay, including the tax increase? Okay, let's calculate this. On the first 20,000, right, the tax that she needs to pay would be 300 ringgit. The next 14,000, right, it's at 6%. So TP is 1140. Now we're going to minus tax rebate because the chargeable income does not exceed 35k, right? How much is the rebate? 400. So she's left with 740. Now this is the net tax payable. But then she already paid installment 600. Okay, she already paid installment 600. Now this will be the tax balance 140, which is due by 30th June 2014. So there's a last day that she has to pay 140. Now if you don't pay 140 by 30th June 2014, we will take this amount increase by 10%. Now the 10% increase is valid for 60 days. That means if you pay between 1st July until, so July got 31 days, right? 31 plus 29, 30 days, 60 days, okay? 31 plus 29, 60 days. So I give you 60 days to settle this amount. So the amount is 154 because the extra 14 ringgit is the 10% interest. Follow? Now, if you miss this date because they say she intends to pay only in December, fine. We will increase another 5%. Okay, we increase another 5%. So that 5% will be in total 161.7. So if you pay on or after 30th August, that's the amount you pay. So in total, the increase is 15.5%. If you take a look at 140 times 15.5%, you get 161.7. Okay, so that is maximum penalty. Follow? Now, so that's all only. So if you look at our tax system, you don't pay tax, it's not serious. You just pay interest. Okay, so if after this date you still don't pay, the government will sue you because you're creditors. Creditors don't pay, then they sue you. That you can't pay, then they sue until you go bankrupt. That's the idea. Follow? Okay. Right, so this is how the tax payment works for final tax balance. Follow up? Okay, now we're going to see the installment scheme. Okay, we operate pay as you earn. Okay, we operate pay as you earn. Because if you do not operate an installment scheme, sometimes it can be very difficult to recover taxes. You just imagine you're a worker, you're an employee. Your salary is about 20,000 a month. Okay, so 20,000 a month. Let's say you get about 200,000 a year. So your taxes easily comes to, I don't know, maybe another 20,000. Now that means 20,000 of tax. If suddenly ask you to pay one shot, you can find it's very burdening, and some people, they are reluctant to pay because the amount is too big. So that's why, to avoid this kind of problem, the government operate installment scheme. Now there are two types of installment scheme under the law. Okay, now there's one type that is for company, trust, cooperative society. Now of course we look at company, right? That's what we learned in F6. We look at company. So the trust issue, all that, don't bother lah, just company. Now all other person. Okay, of course in the main group here we are talking about individual. Now there are two types. Okay, the first type that we operate under company is you pay monthly installment. Now those who practice, you come across the form name called CP204. So if you see the word, you should know which system is that, the CP204 system. Now this one, you pay 6 bi-monthly installment. So you pay one installment every 2 months. Okay, now this is the CP 500. Now the two installment schemes are very different. This one is fully self-service, 100% on your own. This one is partially self-service, so a bit on the taxpayer, a bit on the inland revenue. Okay, now but on top of these two installment scheme, we have another system for employee, where employer has to make monthly tax deduction from employees' pay. Okay, now they call it as monthly tax deduction. In the past they call it as scheduler tax deduction, STD. So in that case, there is a possibility that an individual, is possible that maybe the individual at the same time, he is an employee and the individual has a business. Let's say he has another business that he's not involved, then full-time he's a worker. Now, so if an employee has a business and also has a job employment, not only business, you can have a lot of other investment as well. So it's actually possible that at the same time you have two different type of installment scheme going on. That means you will pay 6 bi-monthly, that at the same time your boss will deduct from your salary your taxes. So this is possible. But of course, if this is possible, then we're going to see how the system work in such a way that we try not to burden the employee to pay taxes 2 times. Okay, now so I'm going to start with the CP 500, the system. Then I finish all this, I'll come back to company. Okay, right. The main one is individual. Now you see, the tax installment for YA 2013. is notified by the DGIR. To the taxpayer. That's why the Director General will send you a notice of installment payment. So you receive the notice means you need to pay installment. You don't receive means you don't have to pay installment. That's why I say it's not fully self-service, it's partial. Because you wait for the Inland Revenue to tell you. Now, but when they want to ask you to pay installment, what basis? How much is the amount? So the DG will base on the latest tax that you have paid. Now, the latest tax that you have paid for YA 2013, now this notice will usually be around January, February 2013. Okay? So beginning of 2013, they will send the notice to you to ask you to pay installment. Now, so you think and see, if the notice will come in January, February 2013, what is the last tax amount that the Inland Revenue will know? Which year of assessment? It's always based on the tax payable for YA 2011. Not 12, it's 11. Because 2012, you think and see, 2012, what's the due date for you to submit? If you have business, it's June 2013, correct? Now 2013. Now this is January, February 2013. So you have not submitted, right? So that's why the latest figure that the Director General has is 2011. So he will just base on how much tax you have on that particular YA and ask you to pay the same amount. Okay. Now, so the 6 bi-monthly installment starts March 2013. Now that's why the notice comes in January or February, so that you have enough time to pay installment in March. So there's the first installment. Now the installment will due 30th of each respective month. That means by 30th of March you have to settle. Okay. Now the next installment will be May, then July, and then September, and then November, and the last one is January. Now that's why you see, March until January next year you keep paying, then all the way until the final tax payment, which, let's say if you have a business, you will pay the final tax in the last month, which is June. That's where you pay as you earn. So 2013 you earn your money, 2013 you pay partial of the taxes. Hello? Okay. Now this is how it works. Okay. So if let's say your YA 2011 tax payable is 6,000, then what they do, they will take this, divide by 6. So your CP 500 will be 1,000 per installment. That's all. Okay. Just look at how much you have in the past. You pay 6 times. So you just divide by 6. Follow on. Okay. If your 2011 your business not so good, okay, your tax is low. 2013 your business is better, the tax is high, then you don't need to do anything. You just pay according to what they inform you. No issue. But if let's say for example your 2011 taxes are very very high because your business very very good. Now 2013 business not so good. You don't foresee that you're going to pay such a high amount of taxes. Then you can apply for a revision, a variation. Okay. So if you find the estimate by DG is excessive, then you can apply for a variation. Okay, you can apply for a variation. Now to apply for variation is anytime up to June 2013. Anytime. So if I receive the notice in January, immediately I receive, I feel it's too high already. I want to revise, go ahead. Okay, you can apply already. Now, or you scared that it's still too early to tell whether your business good or not, so you don't know how much tax you're going to pay, then never mind, you wait. You can wait until April, May, or the last date, end of June. So you have a very long period, anytime up to 30th of June. Okay, but the only thing you have to watch out is beware that if you apply for a variation and then your actual tax is greater than your so-called the estimate, the varied amount, okay, you might get a penalty. Now I say might, that means not 100%. Okay, so again, if you apply, that's why if you never applied for variation, there's no such problem. Understand? That's why I say if 2011 your tax is very low, 2013 tax is very high, you don't do anything. You just pay according to what they tell you. Then you got no problem. Okay? Because only if you apply for a variation and later your actual tax is much higher, then you get penalty. Now there's a formula on how to calculate the penalty that we see later. Okay? Okay. So overall, this is how the installment system works. So what we're going to see is, let's say we have an installment, all right, and then we do a variation. How will the variation affect us? Now, example, okay, let's say for Y13, my CP 500 is based on 12,000, so it's 2K per installment. Okay, 2,000 per installment. Now, see what happened is in April 2013, I applied a variation. To, let's say 12,000 is way too high here. Okay, so I apply for a variation. I varied to 4,008. Okay, so how will this? Okay, how will this affect my installment payment? Now, it's very simple. Always take the total amount, divide by 6. That's all. Okay? So originally your first installment is 2K, 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 2K. That's why it's 12K. Correct enough? Now the due date is which month? March, May, July, September, November, January. If you never do anything, you're going to pay the 2,000, right? All the way until the end. But now you apply for a variation in April. So have you paid any installment? Have you paid any installment? If you apply in April? Yes. Which installment? First. So logically, you must have paid 2K. Okay. So if you know you paid 2K, now, so based on your revised installment scheme, if you change it to 4,008, how much installment you're supposed to pay every installment? Supposed to be 800, right? Correct enough? This is original. This is a revision. It's supposed to be 2,000 and then 800. Okay, but look at so far, how much have you paid? 2,000. Now if your installment is just 800 each time and you've paid 2,000, then how much have you covered? You have covered the first installment, which of course you have paid lah, don't care about that. But you also cover the second, right? Because the second installment is 800 is 1,006. But I've given you 2,000. So this 800 also covered it. Can I cover the third installment? Partial, right? 400, correct or not? So what I'm going to do is I just need to, now here you don't have to pay. Okay? Now this one you already paid 2K lah, okay? And then the 800 you don't have to pay. You pay another 400, and then you pay 800, 800, 800. Now, so that's how the scheme works. Okay, so the revision will always be like that one. You divide over 6. Understand? Huh? Because you have different date to make the revision. So in that case, you can revise all the way, and then you see how much have you paid and how much can you cover. Follow up? Okay, so that's how the revision works. Now we're going to see another issue. So let's say my final tax payable for Y13 turns out to be 9,000 ringgit. Okay, my tax payable for Y13 is 9,000, but I asked to revise it to 4,008, which is very low, right, compared with 9,000. So if you apply for variation and this amount is lower, then watch out. The government will impose penalty because they don't want people to abuse the system. Simply revise down the installment, then later you settle the value. Then it defeats the point of having installment scheme. Now, so in this case, now how do you work out the penalty? Now we take how much tax you need to pay. We minus the installment scheme, the amount that you revise to, which is 4,008. So the difference is 4,002. The short, you're still short of 4,002. Now the government believes that it's impossible for you to be so accurate to estimate how much tax you need to pay. So what they'll do is they will give you a 30% of your 9,000 as a margin of safety. Okay, so 4,002 minus 2,007, you get 1,005. Now this 1,005 is an excess. So anything above the 30%, the government say is your responsibility, that you have to pay a penalty for that. Now the penalty is 10%, so it's 150. So this is penalty for doing a variation. Yeah.
How many times can I revise the variation?
Up to you. Okay, in up to June.
So can there be like I revise down the figure
And then you revise up. Can. If you revise already, you find that, but they can reject. The Inland Revenue can always reject. So you cannot overdo it. You don't say revise again. Okay. Now look at page 246. Now we're gonna see the issue about if, let's say, a person has an employment income and at the same time you also have other sources. So your tax actually covered two different sources like this. Okay, I got employment and I have other sources. Now let's say 2011, because I have employment and because I have business, so two income add together, my tax come to 15,000. Okay, 15,000. Now the government want me to pay installment for 2013. So the government will just refer back to 2011, 15,000, send you a notice, installment 15K, divide by 6. But then in the 15K, I understand that because I'm working, partial of the tax that I pay, my boss also deduct taxes over here. So my boss deduct my tax, so I already suffer one installment. Then now you ask me to pay installment on the 15K, which also covered my employment income. That means you're taking two installments from me at the same time, which is very unfair. Okay, so how should I pay installment for employment and I pay again installment here? So that's why when you have these kind of cases, what you do, you apply for a variation. So you will tell the Inland Revenue that I don't think I will need to pay so much now because my monthly tax deduction is there. So you revise it. But after you revise it, the tax that you revise can be very low already. So once you revise to a very low amount, then you also have another problem, penalty for variation. Now if they impose penalty for variation, again it's very unfair to you because you know that the reason why you vary is because you already suffer monthly tax deduction. So that's why we need a way to resolve the problem. Now the way to resolve the problem is when you calculate the penalty for variation, you must remove the tax that relate to employment income. Okay, now see this. When you calculate penalty for variation, that's how you do it. Okay, now I forgot to update the tax rate table, okay, because I didn't change the example, but it's okay, it doesn't matter. If you follow the present rate, the tax amount is a bit different, but the formula is all the same. Now you look at Mr. Yao. Now you notice Mr. Yao has a business. Mr. Yao has employment, 28,000. Okay, and rental. Now all these things add up, taken off your relief. Let's say Mr. Yao has a tax of 1185. Okay, 11,085. Now, sorry, I forgot to tell you. Originally, the government asked him to pay an installment based on 9195. Okay, originally asked him to pay an installment based on 9195. But because Mr. Yao understands that he already suffered the installment, okay, so he don't want to pay taxes 2 times. That's why he applied to vary to 5,000. So instead of 9,000, I change it to 5,000. But then you see my tax at the end is 11,000. And 11 from 5 is very far different. Chances is going to get penalty. But the question now is, it's very unfair if you calculate penalty based on these two figures because of my employment income. So what we do now is like this. Now, formula is more or less the same. We add one extra adjustment, which is this. Now the actual tax is 1185. We minus out the tax for employment income. Okay, we take it out. Alright, we take out the tax for employment income. Now how to take out the tax for employment income? Now you will take the statutory income from employment, the SI from section 4B, which is 28,000. And you divide it by B is the total income. Now what's the total? Total income is 100,000. And then you multiply with the tax payable. You will get 3,104. So the leftover is logically said as the tax for the non-employment income. Okay, this is what left here, the tax for the non-employment income. Now you ask to revise to 5,000, right? Okay, so already it's 5,000. Okay, you ask to revise to 5,000. So the difference of 7,981 and 5,000 is 2,981. Now you see, just now when we calculate penalty, we take 11,000 minus installment. But now before you minus, you do one extra adjustment because you have employment income. That's all. Okay. So now you take these two and minus, the difference is 2,981. Now we give you margin of safety 30%. Now the 30% is 30% on the non-employment income. and not the total. Okay? So 30% of 7981, you get about 2394. Now again, you see there's an excess of 58.7. So you take 10%, so 58 is your penalty. So it's not a very huge amount. Okay? Now this is how we deal with the penalty system if you have an employment income over here. Okay, you just turn to the example in the back. Alright, now prepare a schedule of how much installment that he needs to pay following the 2 installment pay. And then calculate what's the tax liability, including whatever penalties are. If Tan settled the final amount on 17 August 2014. Okay, let's read this. Now Tan has been served with CP 500 in January 2013. The total tax estimate would be 60,000. Now he's in opinion that that amount is excessive, so he made a variation to 36,000. He filed that request to vary installment on the 18 May. That's after 2 installment. He paid 2 times already. So in June 2014, he filed his B form for 2013 with a chargeable income of 260,000. In the tax return form, the statutory income for employment is 42. The total income is 300. And Tan deducted 1,000 from his employment income under the monthly tax deduction. Okay, so first let's prepare a schedule. I just write here, there's some space here. Okay. Now, you revise to 36,000, divide by 6 means it will be 6,000 per installment. Am I right? And you start when? First installment is March, right? So March 13, May, July, September, November, January. So it should be 6, 6, 6, 6, 6, 6, 36. But you already paid 2 installment under the original estimate by the DG. So if you have paid 2 installment under the original estimate by DG, that means how much would that be? That means 60,000 divided by 6 times 2 installments, so 20K, correct? Agree? Originally it's 60,000, right? So every installment is 10,000. You pay 2 installments because they say that you revise in May after making 2 installments. That means you already paid 20,000. Now if you already paid 20,000, so right now we're gonna see what is your schedule of payment. Now the schedule of payment is after you settle the 2 installments. So now we only want to look at what happened after this. So in July, how much do you need to pay? How much do you need to pay? Nothing, right? So no payment is required. 20K, fair enough? Which is enough to cover 6, 6, 6. So now don't need to pay. Now, when you come to September, you're going to pay another 6,000. Do you need to pay? How much? Yes, you only need to pay 4,000. And then you pay the 6,000. 6,000. That's it. Okay? Now, that's it. A. Now, let's look at B. So, they tell us the CI of 260,000. On the first 100, how much is your tax? $13,850, and the balance 160, you pay 26%. Right, so your tax payable is 55,450. Okay, there's a few issues we must sort out. Number one, you revise the amount to 36. There's a variation. Actual amount is 55. So the next question you ask is, do you get a penalty? So whether or not you get penalty, we're gonna work it out. So is there a penalty for variation? Okay, TP is 55,450. So how much is the tax on employment income? Now, take statutory income, which is 42, over the total income, which is 300, and multiply with 55,450. That means your tax without the employment income is 47,687. Now your installment varied to 36. That means 11,687 is their excess. Now we give it 30% of 4,7,687, which is 14,306. This is not the excess, sorry. That's the different. So the excess is new. There will be no penalty for variation. Okay. So how much is your final tax balance? You take your tax that you need to pay, you minus out all the installment that you paid, correct? So your tax balance is 55450. I minus out 36,000. Agree? The 36 is the installment scheme. Other than the 36, you also suffer deduction under your monthly tax deduction. Sorry, here. You also have 1,000 being deducted from your employment income by the employer, which is also your tax. So in that case, you also need to minus out the 1,000. So my tax balance will be 18,450, and this is due by 30th of June 2014. But the question say you want to settle it in 17 August, which is a late payment, right? So if there's a late payment, then you increase by 10%. So we're going to take this amount, increase by 10%. So it's 20295. Now this amount, if you pay between 1st July until 29 August, 60 days. Now, so if you want to pay in August, so that's the amount you pay. One time only, 10%. Okay, that's the issue we see here for the final tax balance. Right, so done with this. Okay, move on to page 248. Now, we look at the CP 204 system. Tax installment for companies. Now, companies are not like individual case that we see just now. Just now we tell you the Director General will notify if you need to pay installment. They will come and tell you, hello, please pay installment. But company is 100% self-service. You have to do it on your own, okay? So it's 100% self-service. So you don't wait for them to tell you. You must go and tell the Inland Revenue how much you need to pay, you pay. Now, so all companies are mandatory to make installment. So how many months of installment you pay will depends on your basis period. Because you know your basis period will not always be 12 months. You can be longer than 12 months, shorter than 12 months. Okay? So all companies are mandatory to make installment. But before you can make installment, you have to submit tax estimate. So you must submit tax estimate. Now, but there are exceptions. Okay, there are exceptions. There are two companies that under the law you're exempted from this requirement, so you don't have to do it. Number one, if the tax basis period for the first YA is less than 6 months, then you don't need to submit. Okay? Now, if your paid up ordinary share capital at the beginning of the basis period for a year of assessment is not exceeding 2.5 million ringgit for the first YA, and then for the second YA, that means we exempt you from this requirement for 2 years of assessment. So the first YA you must check how much is your capital. The second YA you check again. Okay. Now that means we are saying you are a small company. Now I just look at capital. I'm not talking about the group structure. So you must be a small company. The first year you're small, you don't need to submit. By the second year, your capital increase. So let's say you increase middle of the year, then the second year you're not a small company. Then the second year you have to submit. Okay, so that's why you have to test each day of the first year, second year. Now that's your exception. Okay. Now if you do not fall into these two categories, then you have to make a submission and pay tax installment. Now how will you do it? Okay, take a look at page 250. Now, the procedure depends on whether you're an existing company or you're a new company. So new company means there's a first year for you. Understand? Okay, new company is the first year. Existing means beginning of the second year. So second year onwards, we call that you're an existing company. Now, to submit your estimate, a new company has to submit within 3 months from commencement. Okay, let's say you commence 1st of April 2013. Then by 4, 5, 6, that means 30th June you have to submit. Now after you submit, when will you pay your installment? Now your first installment will be in the 6th month. It's always due by the 10th. Okay? Okay. So you commence in April, right? So 4, 5, 6, 7, 8, 9. That means September is your 6th month. Then you will pay. Now that's why the law understand that if your basis period for the first YA is less than 6 months, then you can't comply with this law, right? Then there's a problem with it. The law is defective. That it's not that I don't want to do, I cannot do. For example, what if my basis period is only 5 months? I don't have 6 months more. Then how do I pay installment? I don't know how to pay. So that's why to correct the defects in the law, we exclude those cases where your basis period is less than 6 months. Then you don't need to pay installment. Is it not? Okay? So this is the reason why we exempt on that particular group. Okay. If you find that whatever you estimated is too low, you can make a revision. Now we allow you to revise up to 2 times. You can do it once in the 6 months. If you think not enough, you do it again in the 9 months. Okay? Or you can do straight in the 9 months if you want. Okay? So you can do 6, 9 or both. Alright? 6, 9 or both. Okay, that's new company. Now for an existing company, you take 30 days before beginning or the basis period for the year of assessment. 30 days before beginning. Okay, let's say for example, e.g. my year end is 31st December. Okay, so I ask you YA 2014. Okay, YA 2014. Now the beginning is 1st January 2014, right? Correct enough? Okay. Before you begin, that means is 31st December 2013. No? Before the beginning. Beginning is 1st January. So before the beginning is 31st December. And 30 days before the beginning. So minus 30. That means by 1st December 13, you will have to submit for the basis period for the tax installment for Y2014. You have to submit latest 1st of December 2013. Now that's because your business is ongoing. So you more or less know your business performance. You submit how much tax is estimate, then you pay. Now you got to start paying your installment, first installment in the 2nd month. Again due on the 10th, and again you can revise them in the 6 month, 9 month, or both of them. Okay. Yes, simple example. Okay, e.g. Now let's say A. Sendram Berhad commence business on 1st of August 2013. And you close the account 30th June 2014. Okay. If you follow the rule on basis period, not 31st December, not exactly 12 months. So the tax basis period for the first YA will be August until December 2013, right? That's YA 13 lo. Second, 1st of January until December 2014. Third, 1st of July 2014 to December 2015, to June 2015. If you cannot imagine, then you will do back slowly, write down your accounting period, and then see how you get the basis period over here. Okay. Now, estimate. I don't need, right? I don't have 6 months. This is only 8, 9, 10, 11, 12, 5 months only. So I cannot submit. Alright, I cannot submit. So it's only 5 months. Okay, 2014 different already. I'm an existing company. So 30 days before the beginning. Beginning is 1st January 2014, right? So 30 days before beginning. 31st December minus 30. That means by 1st of December 2013, you submit. This one, now, why 2015 is 1st July 2014. So 30 days before the beginning. That means by, what's the date? 1st of June. How do you get 1st of June? 30th June minus 30. 30 minus 30 is what? 0. So 0 means you minus 1 day. So 31st of May 2014. Understand? So that's how you decide on the due date, how to submit your tax installment. Okay. So now we change another example, e.g. Okay, B. Sandram Berhad, comment business 1st April 2013, close account December 13. Estimate that your tax is 90K. Now, you estimate your tax for Y14 is 50K. So based on this, how should the installment scheme works? Now we start with the first one. So 2013, you're new. So your basis period is from 1st April 2013 until 31st December 2013. That's your basis period. Now, if it's the first year for you, what's the law say? Within 3 months. So you submit your CP 204 by 30th June 2013 at 90K. So your installment is 90 divided by 9 months. Correct, huh? Because your basis period is for 9 months. So you take 90 divided by 9. So 90 divided by 9, you get 10,000 per installment. Commence in the 6th month. That means your first installment due by the 10th of 6th month is which month? 4, 5, 6, 7, 8, 9. That means 10th of September 2013. Follow? Now, why 2014? Now you have to submit 204 by when? See, now your basis period will be January to December. So you submit CP 204 30 days before the beginning of the basis period. That means before beginning is 31st December minus 30. So by 1st of December 2013. At how much? Now, for existing company, minimum must be 85% of the last amount. Now the last amount is the last amount of your estimate or the last amount that you revise. The last one, latest one, the nearest to you. So if you never revise, then you follow the original estimate. Now if you revise it, then you follow the revised amount. If you revise 2 times, then you take the second time one. You just follow the last one. So in this case, I only give 90,000. So 85% of 90,000 is 76,500. And you cannot use 50K. So you submit 76,500. If really you think that this is very high, then you submit a revision. That means later comes to the 6 month, you revise again. But when you submit, you must use 76,500. So if it's 76,500, how much is the installment? You divide by 12, 6,375 per installment, and you commence installment in the second month. That means your first installment due by 10 of February 2014. So if you look at the situation right now, there's a possibility that 2013 and 2014, because you pay installment different timing, so there will be certain month that in 1 month there are 2 installments because you still have the first installment to run. Now, but this problem only start at the beginning. After that, there's no issue already. That's how the installment scheme work for company. Okay. Now, company, the installment scheme is mandatory. So you don't have a choice. You have to do it. And if you don't do it, then there'll be penalty. And if you estimate a very low amount, there's also a penalty. So that's why if your estimate is too low, you get penalty for underestimation. So if your estimate is too low, you're gonna get penalty for underestimation. Okay, what's the penalty for underestimation? Now it's exactly the same as individual CP 500. The way how you do it. Now of course there's no employment income here, okay, company where you got employment, okay? So that's why you just take the tax, compare with the installment, and then take 30% different. If the success, 10%, okay? Now later we see an example and show how this works over here. And we also show you example later what happened if let's say you never submit. Yes?
What if the estimated tax for 1/4 is higher than 85% of 90K?
Then it's okay. Because minimum is 85. You want to estimate a higher amount, there's no issue. Okay? Right, we take a short break, come back, then we see example.